Dangote Cement Plc Q1 2026 results. So in this series, we are going to look at Dangote Q1 2026 results. So like the headline reads, revenue is up by 20.4%. Then Naira amount to over a trillion point two Naira. Then profit after tax grew over 53.5%. Naira amount of 321.1 billion. Then gross margin grew from 96.1% to 59.1% to 62.5%. Then the operating cash flow nearly doubled. Now the operating cash flow is sitting around 591.3 billion. Then running at a pace of almost 1.84x net income. That is one of the net income. That cash conversion rate is the strongest signal in the filing. So it's a really strong rate, but the composition sits behind the story. So let's dive into the details, see what happened, the supporting fact behind the figure and stuff like that. So let's get in. So remember that is our X page. So you can always follow us on X, @_invest, follow, like, comment, share, stuff like that, so that you don't miss out on the next analysis. So let's get there. So this is for the graphics. First of all, this is the technical charts of 1 month technical chart of Dangote Cement. You can see from 2012. You see where the price started. You see the swing high, swing low, up, down. 2020 was COVID. Price got up. To tell you that businesses are going concern, especially when they tell you if you invest in the long run, right, you're gonna make money provided you invest in a good business and the business is still in business, because there is a story of the business going out of business. That is why analysis, checking up on the earnings matters to know when the business is going south. So you see 2024, you see price dipped back, took off. This was the revaluation, floating of Naira stuff period. You see price pushed up, dipped, now up. So currently price is sitting around 891 Naira after hitting a high of 1,200 Naira. So this is a monthly chart. So this is where price is. So throughout the month of July, it was a negative month for the stock. So this is where they are now. So this is the technical chart side of things. So let's look at the income statement. So for the income statement side of things, for the income statement, you can see that revenue we talked about, over 1.2 trillion in revenue. That's 20.4% increase. Then you see the profit, EBIT, that's profits before interest and tax. You see it's also growing by 27%. So in 2026 Q1, profit is over 506.2 billion. So also looking up. Then profit after tax, after you do your deduction and stuff like that, you see that it also grew over 53.something% to 321 billion roughly. So pretty nice. Then you see the margins also looking up. So it's a strong income statement, but we tell you what back up these earnings to the division, the segment and stuff like that. So this is the income statement. You look at the ratio side of things, so you see that all of them are looking up. Too. So pretty interesting results, pretty interesting. The margins are looking okay, not to doubt. Then for the balance sheet side of things, then this is the balance sheet. You see that the total assets of the business declined though. So the total asset is sitting around 6 trillion roughly. Then the liability side of things to the equity also grew by 9%. Equity grew by 9%. But one thing is hurting this business. One thing that affected this business is currency translation. So currency translation only happen when a business operates in different country with different currency. So you have to convert back to your base country, so which is naira. When you are converting, so some of the currency can be positive or negative depending on the exchange rate. What happened between the exchange rate of those country and your parent company. So this is so it negatively affected in Q1 26. So the ratio side of things also, it is improving, but it's still below the industrial standards. Still improving, but still below though. Then there is a rapid the leveraging. If you look at the debt to equity side of things, and returns are looking up compared to previous, both return on assets and return on the equity side of things. We see that they are looking up. Then for the cash flow, so this is the free cash flow. This is the cash flow statement. So you can always download these graphics from our X page. So this is the free cash flow. So the cash flow statement. So the free cash flow of this, the ideal one for in Q1 2026 was sitting around 454 billion, as against last year full year, which was sitting around 640.7 billion. Then for the income statement, those earnings we saw, those earnings, let me go to here. So those earnings we are seeing, actually, the operations are, they really came from a real driver, the top line side of things. Example, their annual bagging capacity now, you bag cement. So you bag it. The annual bagging capacity now has moved from 52,000 kilotons to 55,000 kilotons. And also selling price, they added cost, increased their selling price to 6%. So in Q1 2026, price of cement cost 6% more compared to what it was in Q1 2025. Then there is a non-recurring revenue that came in, which came in from, it was roughly 10.2 billion, which is coming from a hyperinflation gain from Sierra Leone. Sierra Leone has a hyperinflation. There's a way you convert it, it will be a windfall to the business. That's why we call it non-recurring. It might not happen next time. It didn't happen from the core earning. It's just non-recurring or one-off, outlier, whatever you want to call it. Then for the segment, business has two major segments, the Nigerian segment and Pan-African segment. So for the segment side of things, the Nigerian segment is carrying the business. The Pan-Africa is struggling. Then also there is a top-up in their investment in Dangote Limited Ghana. So the Ghana side of the business, they add up to their investments from 267 billion to over from 2.6 billion to over 17.9 billion. So it's increased. So we are looking up to the Ghana leg of the business to start bringing in money. Then for the interest rate is still high in Nigeria. That is why there's an asymmetric cross debt. What it means is that the bond Dangote is issuing is sitting between 11.8% to 23.5%. That's the coupon they offer in their bond due to the high rate environment. So the debt you are seeing is sitting in that price, reflecting a high rate environment. Then for the CPs, which is the commercial paper too, the commercial paper starts within 16 to 17%. So to also show you how the rate environment is in